Hey Internet, I want to talk about money, specifically our monetary system, a system that's deeply unfair, predatory, that only serves to widen the wealth gap and make people working or associated with banks richer and the rest of us in the productive economy poorer. So how is this happening and why is this happening? So the classical banking model of one person's savings being another person's loan has long been broken. There's a complete disconnect there. Banks for many decades have been given the license to print money, to create money in the form of loans. You go to a bank, ask for a loan, they grant it, they give it to you only on the expectation that you'll give that money back, plus you'll pay back the interest payments. And it's the interest payments that are their business, that's their bread and butter, that's how they make money. And this effectively works as a siphon from the productive economy into the FIRE economy, the finance, insurance and real estate economy. And the real problem is that when you have all of these loans being created, the money for the interest payments doesn't currently exist, that new money. So that has to come from the existing monetary supply. This creates conflict where one person's interest payment is another person's electricity bill. It means that people are stepping on each other's heads for breadcrumbs. It forces people into poverty because there is simply not enough money to go around. And there is a concept known as debt slavery, where you have a ruling class, a banking class, who are in control of all the money, and then you have everybody else. So instead of having a healthy economy where ordinary people get good wages and have disposable income and can save and invest, what happens is you have people on miserly wages that are reliant on banks for loans from everything from accommodation and housing to leisure, for example holidays and transport in terms of cars, even just feeding themselves. And this means that people are drowning in debt, and it's not just ordinary citizens. You see it everywhere. So you have citizens in loads of debt, you have companies in loads of debt, and you even have governments in loads of debt. It's estimated that 98% of all money that exists at the moment in the monetary system in the planet is credit or debt. And as I said before, this is just creating a siphon that's making everybody indebted and stressed and making people who work in banks or near banks richer. It's a very destructive monetary system. And specifically related to housing, it's a real problem because people are required to get mortgages to get houses because houses are too expensive. People can't afford houses on the low salaries that we have, and we see house prices just escalating away from stagnant wages. So people need to get longer term mortgages, even intergenerational mortgages, as we've seen in Japan. And this is a real problem where people think they're getting richer when their houses are going up. Actually, they're getting poorer because they have less disposable income. They're expected to spend more money on mortgage repayments or rent, and it creates a two-tier society where you have the landlord class and then you have the renting class. It's going back to the age of serfdom and kingdoms. So what is the key risk of this system? Well, it's a credit bubble. As I said, you have 98% of the world's money as credit. So to keep this credit bubble inflated, central banks have to keep creating money. They have inflation targets of around 2%. They keep the money trickling along and tries to push enough new money out into the economy to service all these debts and, crucially, those interest payments. But it's just propagating this siphon effect where people feel like they're getting richer, but actually their wealth is just being stolen from underneath them. And obviously it's a much healthier system to be earning and saving and investing. It's a much more stressful system to be dependent on loans and always being behind on your payments and trying to find money to repay these debts. And there's something called debt deflation that terrifies central bankers and economists. And this is what happens when the credit bubble starts to deflate, as happened in 2008 with the crash that particularly affected the housing market. So once a monetary system starts to slow down, that people stop taking out loans, you have peak credit, as they call it, the money supply contracts people stop taking out new loans, people start defaulting on loans. So all this money in the economy just starts vanishing, and that actually that decreases the monetary supply, and that means that existing debts become more expensive to service. So it's a dangerous spiral that is normally intervened upon by central bankers by flooding the world with more cash. So it's an unsustainable credit bubble Ponzi scheme. Now I think that an organisation called Positive Money have nailed this. They're fantastic, relatively new NGO who've got some fantastic videos on their website that neatly explain these situations such as debt slavery and the housing bubble. So I'll put a link in the description bar. Please go check it out. Thanks for listening.